Hey, what's going on, everyone? Welcome to another episode of the Cash Flow on the Fly podcast. We have John Pearl with us today. John Pearl is a commercial real estate investor and co founder of Freedom Investor. He has participated in numerous multifamily mentoring programs and masterminds and has experience both on the LP and GP side of the house. He is a prior service U.S. Army infantry officer and a security specialist in the nuclear industry. He currently works at Diablo Canyon Nuclear Power Plant, which is set to shut down in 2025. He has publicly stated that his mission is to replace his W 2 income. John, welcome to the show.
Yeah, thanks, Satch. Actually, very recent update to that bio. So just yesterday, the state of California, where I'm located, announced that the power plant that I work at, Diablo Canyon Nuclear Power Plant, is going to extend the life. It's been a very controversial topic over the past few years. It's the last operational nuclear power plant, but yeah, my mission is still the same. By 2025, I'm looking to replace my income with my income from the plant with income from real estate investing. So the mission hasn't changed, and I'm excited to be on the show today.
Dude, that's awesome. So, what's the new timeline for the shutdown?
Yeah, so the new timeline is they've extended it for 5 years. And the reason for that is because, the state was supposed to have all these alternative renewable energy sources online and operating by 2025, but that's not looking like it's going to happen. So they've extended the life of the power plant. And, that doesn't really mean a whole lot for me. It does give me a little bit more of a cushion, but, I'm 36 now. Instead of it shutting down in 2025 and me being, 38, 39, well, now I'll be 42 or 43. So it doesn't really change much in the bigger picture. So I'm still all in on real estate.
Dude, I love it, man. I love that you don't change your. I think most people would have probably felt like they were giving a break on their mission. So it's like, oh, I get to not work as hard, and I got more leeway now on my goals. So I get to be a little bit lazy. But so I love that you did not change that. You stick to your original plan. You don't change the target. You stick to it. So I love it, man. Dude, can you give us a background on your journey with financial education? So you came from the army, working in a nuclear plant. How did all of this evolve into real estate and where you at today?
Yeah, man. So I like to starts, I grew up a relatively comfortable upbringing. My parents were both W-2 workers, upper middle class, but no entrepreneurship, no like real estate investing like that. And, comfortable upbringing, but my parents were always gone, or at least my dad was with work. And, no fault of his. He's just trying to do his best for the family. But, I never really thought about money or, how to grow money, how to make money. It was always just kind of like work a W-2 job. So I get to college and I spend frivolously. I rack up student loan debt. I graduate from college and it's hard for me to find a job. I come back to the central coast of California, met my wife in Tennessee at college. We came back to California and I had $50,000 of student loan debt and I couldn't find a job. And it was the worst feeling in the world. I'm wanting to marry my then girlfriend. She's kind of footing all the bills for everything. And I have debt collectors calling me. Remember, I got really into surfing at that time because it was the only place I could go. I just leave my phone in the car and the debt collectors couldn't reach me. It was really a low time in my life. It was a great time, but it was also a really low time in that sense. So once I did get a job, I was in the Army National Guard at the time, so I was getting drill pay like a few $100s a month, and that was all I was bringing to the table. My wife or my then girlfriend's paying for everything else. So I did get a job eventually at the nuclear power plant, which was my first time ever making some real money, and I really got down to business, focusing on paying my debts off, and I developed some pretty good money saving tracking habits. Long story short, I get to a point where all my debt's paid off and I'm starting to, okay, I have X amount that I was paying for debts every month. Now I want to start investing that and start building. And I tried a number of different things. I started maxing out the 401k, which, ended up being a good thing, but there are a few things I didn't like about that. The lack of transparency, the lack of control. once I found out that I couldn't just take that, once I found out I couldn't access that money whenever I wanted, I mean, you kind of can, but there's limitations to it. I didn't like that at all. So I had, I'd made some other investments over the past few years as well around that time. And, I had also discovered real estate investing right around the same time. And once I found out about the concept of, assets versus liabilities, don't spend your money on stupid stuff that costs you money every month. Instead, buy things that make you money, that produce income, like the goose that lays the golden egg type of concept. You go out and buy something, and then it makes money for you, and you take that money and buy another asset that's going to make you money. So that concept was fascinating to me. And this was all happening right around the same time that I found out the power plant that I worked at was shutting down. So I put all these pieces together in my head, and I kind of made a plan that I was going to go all in on real estate investing over the course of the next few years between then and when the plant shuts down. And, that's when I started really diving in on the real estate investing, kind of skipped past the single family stuff. Everything I was reading about saying, everybody who invests in single family ultimately gets to a point where the scalability is just not there. And then they jump up to multifamily. And so I kind of made the decision that I was just going to get educated, start networking, start meeting people, and go straight to multifamily. And that's, that's when I got into discovered the syndication space. And so now, I'm invested as a limited partner, I'm invested as a general partner. And now I'm just trying to spread the word because, not enough people know that you can invest in real estate, get all the benefits of owning real estate, cash flow, appreciation, the tax benefits. You can do all that without doing any of the work. And so I'm trying to spread the word and help folks get educated and, spread the awareness about passive income and passive real estate investing. So that's kind of where I'm at now.
Good. Awesome story. I love it. I love how you went from being deep into debt and switch your life around. And not only you got back to normal level, but you went beyond that and now started multiplying your income via syndications and real estate and finding ways to invest your money. What do you think was the transition that took you from, because there's not many people do that. Many people go from being in debt to like just pay off their debt to then going back to living paycheck to paycheck. I think that's like the default, right? People don't think I'm gonna get out of debt to increase my net worth. They just think I want to pay off my debt to not have to pay the debt, right? So what do you think changed? Did you read a book? Did something inspire you? What was it?
Yeah, it was all different sorts of education and just relationships. So, it started for me. There are a few books that I read, and, for most people you hear, Rich Dad, Poor Dad, and that one definitely did play a part. But for me, it was a book called The Millionaire Next Door. And it was all about how, the general concept of the book is the people who appear to have the most money most of the time don't, at least, in the average people you see around town. And then the ones that do have the most money are, living simply. They're investing their money where it matters, not on stupid stuff like, watches and, having the nicest car in the neighborhood. I mean, don't get me wrong. I want that stuff eventually, but there comes there's the right time to do all that stuff. And I knew I was in the building phase. So that book played a huge role, Rich Dad, Poor Dad. And then the networking, just meeting other people and realizing that, you don't have to come from generational wealth. You don't have to be a trust fund baby to, live this kind of lifestyle. It's all, most of these people come from relatively normal upbringings, and they just have made a decision that they're going to spend their money on things that will increase either their passive cash flow or their general net worth. And so that kind of stuff really fascinated me and opened my eyes to what is possible. So that's when I stopped spending my money on the stuff that, was going to force me to live paycheck to paycheck, and started storing my money with the intent of investing it into cash flowing assets. So it was kind of there was no one single moment, but just kind of a getting more involved in the community and just slowly changing my lifestyle over the course of a few years.
I love it, man. I like that you skip the single family home. Not many people do that. um, Many people think they got to start small, and I think the version of that is starting with single family homes before they go to multifamily. I myself did that. I did not think I could go to multifamily straight. I wish somebody like you would have shook me and said, hey, you don't have to. But can you break that down? So like you go straight into multifamily, can you break your journey down as far as your first syndication, what happened, what was the experience?
Yeah, absolutely. So, I mean, it did start with single family. I bought my personal residence. And so my wife and I, we bought a condo and, here in coastal California over the past 10 years, if you bought anything, it's going way up. And so we did all right with the equity there. And we ended up, selling our house and we had a nice chunk of change to invest. So that's what ultimately kicked off our journey. But as far as investing in, residential real estate for, other people to live in, I did skip the single families. And the reason I did that is because I knew I wanted to ultimately be a general partner in commercial real estate syndications. That's, the goal for me once I'm out of the power plant, is to be doing that full time. It's not a retirement by any means, but it's a lifestyle. And the way that I did that was I started getting out to these conferences. I knew I had to get educated, and that's when I met some folks who were putting these deals together. And I developed a rapport with a strong team who had a strong track record and a lot of experience. And I was able to talk to a lot of other people who had invested with them previously. So over the course of a few months after this conference that I went to, this was the fall of 2019. And, I invested passively as a limited partner in a 200 unit Class B apartment complex just outside of Dallas. Now, the catch to that one there is that it closed in March of 2020. And if you recall what was happening in March of 2020, COVID-19 was spreading around the world. And I thought I'd made the biggest mistake of my life. But, I just put $50,000 into a deal. Just a few years prior, I was 50K in the hole. It took me a lot of effort, a lot of discipline to save this money up to invest. And, ultimately it's been a good investment, but, it really scared me. And I was glad that I had done it with a team with a strong track record and with a team that had the experience of doing this before. I don't know if nobody has the experience of going through something like COVID-19, but that's why I love commercial real estate syndication so much, because you can invest with professionals who have the experience to deal with, these black swan events that come up. So that's what ultimately enabled me to get into the space with confidence. I was, mitigating the risk by investing with a professional team. And then, over the course of the next year or so, I decided that I was going to get myself into a coaching program to learn kind of the other side of the house, the general partner side, the active side, putting these deals together. And that's when I was able to partner with a team and get into a deal on the general partner side. It's a 340 units portfolio in Mobile, Alabama. So we've been in that deal since December of last year. So that's been a great learning process as well. So just kind of slowly progressing through and just learning as I go.
Love it, man. Can we break down a little bit more that deal and the 200, the first one that you did as an LP, the 200 unit in Dallas? So this is your very first deal. You had been networking, meeting the people that have invested with this group in the past. Is that correct? You
Yep.
talked to a few of those folks.
Yep.
What were the things that sort of like you checked your boxes as far as like a checklist goes, saying, I feel comfortable in investing in this deal because this is the very first one, right? And I think this is the very first deal is people's biggest hurdle, because it's the first time you're just gonna throw $50,000 out there, right? It's not like a stock that you can put $1,000 and see what happens, right? So I think after you do the first one, every subsequent deal just happens a little bit easier because you're already familiar with it. But the first one is always the biggest hurdle. So walk me through that process of what was going through your mind before you gave up those $50,000.
Yeah. So my first, the first box that was checked for me was just my general gut instinct. I'd gotten out and meeting these folks in person and I chatted with them, and I know people can put on an act and all that, but I had this was a two-person team. Were the lead GPs. One of the team members was a coach in this network whose event that I was going to. And so that right there, that tells me, there's a lot riding on someone's reputation in this space. If if you make one bad move, that has the potential to ruin your career in this space. At least it's going to severely prohibit you from performing business with anybody who knows the people who were invested in that deal that you made a bad move in. So the fact that this person was a coach in a very successful network was a huge key for me to feel comfortable right off the bat. And then, of course, I talked with other people who had invested in multiple deals with these folks in the past. And one of the key things I was looking for was their communication rhythm. As a limited partner, you have to be okay with handing off the responsibility to the general partner team of managing these deals. You're not going to be making any of the decisions. And, sometimes that has the tendency to, push people away right there. And that's okay. It's not for everybody. So I wanted to know what the communication rhythm was going to be like. Are they reporting out?
I don't want to cut you off, but it's funny to think that, because if you think of the 401k, you're literally making zero decisions. You're giving your money to somebody that you don't even know.
Yes.
And locking it up for 30 years. And it's like, for some reason, we think of that as more controllable than this. To me, it's like, this is more, you have more decision making. Yeah, you may not have decision making on the day-to-day stuff, but who the guy running the syndication is. You can tell more than the CEO that you will never get to speak to, unless obviously you're investing in an index, right? But if you invest in a specific company, if you invest in Apple, you're not speaking to the CEO, right? So
yeah, man, absolutely. Yeah, it's definitely an illiquid investment, over the course of 3 to 5 years. But you can do the research up front much easier than you can with any of those traditional stocks. You can you're gonna get the monthly reports. At least you want to make sure you're going to get that when you're doing the research on these folks. One of the things that I was looking for is that the lead GPs had at least one person on the team who was doing this full time. So there's a lot that goes into managing an apartment complex and these business plans. Even though you're not actually doing the property management, the asset management piece of it, if you're not staying on top of it, if you don't have somebody doing this stuff full time, it can have the tendency to get away from you. So really the most important thing for me was just, trusting that this team was going to do right with my money, and the fact that they were going to communicate properly and, tell us, when something's going good, when something's going bad. And that's definitely been the case. So I think, everybody's decision-making process is going to be different. You have to get to that point where you're ultimately comfortable. But yeah, now I'm at the point with these guys after just one deal with them where I would, if they have a deal and I have the liquidity, I would feel comfortable just giving them my money without doing any more, research with them, because I trust them. And, I've heard that a lot with other people too. You get to that point where you just trust the operators and that they're going to take your money and make more money out of it.
Right. I love it. So pretty good points that I think I can summarize, right? Social proof. The guy was a coach in a big network that is trusted by many. They're not going to easily ruin their reputation just to do one bad deal. You spoke to other investors that have invested with them in the past. I think it's crucial, right? You get to see their experience and a non-biased opinion from someone else, right? And you look for them to be at least someone in the GP to be doing it full time.
Right. Absolutely. And of course, I would also add, you need to understand how these business plans work. So don't just come into the space blindly. Learn how apartment investing works, what a value add strategy is, how you make money, all that stuff, of course, as well.
Cool. Dude, I love it, man. And so it's been you guys bought, you went into that deal in March 2020. It's been just over almost 2.5 years, I guess it will be, right? Are you guys selling that property soon? What's the current
progression? So the property is actually on the market right now, but as you know, it's crazy right now. All sorts of retrading going on, and I think we put it on the market a little late, and late in terms of what the debt markets are doing. But, the great thing about this is if it doesn't sell right now, we just continue to hold and, we wait for the right time to sell it. It was advertised as a 5-year hold. We're only 2 years into this. So the general partners communicated that, we thought we might be able to get to a point where we can sell and hit our projected returns. But if we can't do that, then we hold and we continue on with the business plan. And, we wait for the time that we can hit our projected returns. So that makes sense to me. And I'm completely happy with, their decision-making process on it.
Good. I love it, man. We were, we were talking, and you said you attempted doing a syndication, and it was not a success, right? Your first attempt at a syndication was a failure. Can you tell us a little bit about that?
Yeah, man. So this was, let's see, my LP investment, that was March of 2020. So later on that year, I get into a coaching program and I'm starting to get work to get a deal ourselves as a general partner. So I partnered up with the guy, Daniel. He's my current partner now. He had all the skills that I lacked. So we make a great team. And ultimately we partnered up and started combining our efforts. And he's from the Midwest. So he was hunting for deals in the Midwest. And ultimately we found one that penciled out in Iowa. And we got it under contract. And, we go out, we fly out to the property to perform our due diligence. And, we're finding things that are not as they were advertised in, in the slide deck that we got. And, it's these things are starting to add up. And, one of the things that we were attempting to, one of our bigger value add plays was there was a commercial space on the property that was currently not in use, and it was advertised as I think it was right around like a $30,000 capex to get this place up and running and rentable to a commercial tenant. And it, after we had our contractor out there walking the grounds with us, it was going to end up being more like a $250,000 price to get this place up and running and rentable. We walked through all the units. We did our, we compare all of the rents to what they're actually paying, and things weren't adding up. And, bottom line, all these red flags were starting to pop up in the research that we were doing. And so, we try to come to an agreement with the sellers, and, they're not budging on the price. So, ultimately we had to respectfully back out of the deal. One thing we had going for us was it was an extremely friendly buyer contract. So we had all these contingencies written into place, and we were able to get out of the deal. That was the last thing we wanted to do. We invested thousands and thousands of dollars into this trip and, into hiring people to come out and perform the due diligence with us. But ultimately, it's better to back out of a bad deal than to get locked into a bad deal. So, we learned a lot, and, full disclosure, there were some things that we did that were definitely rookie mistakes, but, it was like an expensive, hands-on class for, what not to do when you're trying to buy an apartment building. So, that's the way I look at it. It was a great learning experience. And, we were able to take that experience down the road and apply it to our, future deals.
Yeah. Hey, me hearing this story, I don't consider it much of a failure. I mean, obviously I don't know the rookie mistakes that you're talking about, right? But overall, I mean, to me, it seems pretty smart move. You guys were able to recognize there were some red flags. You guys did not get cut emotionally in the deal, and then just and ended up doing a bad deal. Like you said, you had the logic to say this is not adding up. We're backing out of this deal. Many people, I don't know the earnest money situation, but we did a deal. We were going to do a deal 2 months ago. We had $500,000 hard, and we ended up backing out of the deal and losing the $500,000. I did not lose any money, but the guys that put the money on the GP side, they lost it all. But that many people will, for not losing 500,000, will continue down the process knowing that they probably should not be doing this deal, right? So I'm glad to
Yeah,
see that you
yeah,
guys,
totally.
it's not adding up. We're backing out of this. So uh, cool. I mean, I like that, man. That's awesome. Um, dude, we were talking about something that was interesting to me, and you have been funding your real estate investing business with crypto gains. Can you
Yes, sir.
talk to us about that?
Yeah, so right around the same time, we were talking about March, April 2020, right when COVID was hitting, right? So I was very intrigued by how the process works with, how we're able to, I think, the first stimulate or the first big stimulation was, April, March 2020, the CARES Act, when all the money was printed. And I'm like, how are these trillions of dollars getting printed? And, where's it coming from? What's that going to do to, the money that is currently out in circulation? So I started doing a lot of research. I started diving into, Robert Kiyosaki, Rich Dad Radio Show. He talks a lot about like, hard money principles, sound money principles, hard assets, real estate, gold, silver. So then he started talking about Bitcoin, and I was starting to buy gold and silver because all this money's entering into the circulation, and I didn't want I thought that there was going to be some pretty major inflation, which there has been over the course of the past, especially this year, but I started getting educated and started buying Bitcoin, pretty much at the advice of Robert Kiyosaki. And, I did a lot more research on it, but, that's what kicked it off. And then I started buying Ethereum, which is another cryptocurrency. And then I started learning about some of the other smaller ones. And, this was right around the same time as I sold my house in 2020. And I was able to take some of the profits from that and I put it into the crypto space. And for anybody that was paying attention or that has been following crypto for the past few years, the second half of 2020 was huge. There was a lot of growth. I was, I looked at it as a speculation the whole time. I always knew that I could lose my investment at any time. And, I was okay with that. I was doing a lot of research. Long story short, I did pretty well with it. And I was able to take some of that, reinvest it into real estate. And also, that was right around the same time when I decided that I wanted to start a podcast and I wanted to start, traveling a lot to these, investing in my network. I took some of that money and I invested in a mastermind. Satch and I are in a mastermind together, Raise Master. That was all paid for with crypto profits. And, I'm kind of using it to dollar cost average into myself. So for anyone that's not familiar with that term, dollar cost averaging, that's when you take X amount of money and invest it into, usually I think it's into the stock market. People talk about it in crypto, but you just do it periodically. You don't try to time the market. You just invest incrementally over time. So I've kind of taken that concept and done it into myself. I'm paying for masterminds. I'm paying for coaching programs. And I am, I've hired a virtual assistant. That's all paid for with crypto gains. So once the market started going south this year, I decided it was time to cut my losses and I just sold it all. And now I just, I have a lump sum that I'm using to fund my business expenses, traveling to events. And, I have X amount that I'm using for that until what I'm doing on the business side of this with, helping, on the general partner side until that starts paying for more of, what my expenses are. I'm using the crypto profits. So yeah, it's been a nice ride. And, I would definitely caution everybody to do your homework before investing in crypto and realize that, it is a speculation. I still do believe in the long-term principles of it, hard money, Bitcoin, smart contracts, decentralized finance. I love all that, but we're just not quite there yet for it to be, adopted more mainstream.
Dude, I love that, man. It's pretty smart. Yeah, I don't have any crypto, but I do understand the benefits that you're describing. So, like long term, I see the benefits. In the meantime, It definitely, I'm kind of like you. For me to do an investment in something or pull the trigger on something, I have to do the research, and it was just something that I didn't want to spend time doing, so I never pulled the trigger on it.
Yeah, I just happened to be at that point in my life. I was working night shifts out at the power plant, and there's absolutely nothing going on. So, I was spending a lot of time doing the research on it, and I got to a point where I felt comfortable. So yeah, but for anybody else, do your research for sure, because it's a speculation.
Yeah, love it, John. We're reaching at the end of the podcast here. Where can people? It's been awesome having you, man. Where can people find out more about you if they want to invest in any upcoming deals that you have? How can they do that?
Yeah, so the best place to go, my partner and I, we have a guide that kind of tells you a little bit about what we do and how syndication works and how you can passively invest in syndications and what it would do for you. And the best place to go to find that is to www.passivecreprofits.com. So that's CRE as in commercial real estate. So passivecreprofits.com. In that guide, there'll be links to listen to my podcast, to connect with us, schedule a call, connect with us on LinkedIn. Love to, chat with anybody who's interested in learning more.
Perfect. We're going to put all those, the link to that in the show notes for everybody that wants to take a look at John's stuff and follow him. He puts a lot of content out there. He's got that awesome podcast that I was on, and he brings some awesome shows, including me. Some awesome guests, I'm sorry. John, it was awesome having you, man.
Thanks, Satch. Much appreciated.